Here's a trend that we keep seeing over and over again. Toronto investors who own condos want to invest in a house instead because there are better opportunities with cash flows and appreciation. But the next question comes up. Is it worth it to make that switch since there are extra costs and tax implications every time you buy and sell? In this video, we'll dive into some key things to consider so that you can make a more informed decision when deciding to shift your investment from a condo to a house. Before I dive in, remember to subscribe to our channel and hit the notification bell so you don't miss other real estate investing videos like this from our Elevate team. The biggest hurdle, of course, is budget. Toronto houses cost more, and we're looking at a purchase price of at least $800,000, so this means you need at least $200,000 of upfront capital to cover that 20% down payment and closing costs. Assuming you have sufficient capital to buy a house, next you should think about your investment objectives. Number 1, how long are you planning on holding your investment for? There are high fixed costs every time you buy and sell a property, so you might not make up for it if you hold your next house for a short period of time. But if you are a long-term investor, then over time, your higher total returns in a house will pay for the cost of switching assets. And then after you reach that break-even point, you'll get better net returns moving forward. Besides investment period, many investors wonder about timing. Right now, there is a lot of supply in the condo market as a result of COVID, and you can watch this video right here for more information. So chances are, if you sell your condo, you won't be selling at the peak. But what you should also know is that even though it's not everywhere, there are more great deals in houses in Toronto right now too because of that same COVID uncertainty. So even though your condo can sell for, say, 5% less, you make up for it when you buy a house with a 5% discount. In absolute terms, you save more because the house costs more. And here's one more thing to note in terms of timing. Since the gains are likely captured in the house and not the condo, it kind of acts like a capital gains tax deferral since you don't have to pay as much capital gains tax when you sell your condo. We talked about time in the market, timing the market. So now let's talk about how much time you have to spend on the property itself as a landlord. Condos are newer and you pay for condo fees, so they generally take less time to manage as a landlord compared to houses. And this is a big reason why investors choose condos if they want less headaches. On the flip side, condos have lower cash flows, and right now, you're likely in cash flow flat or cash flow negative territory, so there is a higher chance that you'll have to carry your condo if needed. Freeholds typically run cash flow positive, and even if you hire a property manager, if you want a more hands-off experience, the houses we recommend are still cash flow positive after property management fees, so that switch will give you a safer investment from a holding power standpoint. Now, I mentioned condos are new and they have less work, and this also means that they have less value-add opportunities as well. So if you're looking for ways to increase your investment returns, there is way more potential with older houses. And if you want to take it one step further with things like adding a new laneway house, then this is only possible if you make that switch. If you've watched my other videos, one of the things I like to do is to illustrate my point with numbers. In today's video, I'll compare how your total position would look like if you hold a condo for 10 years versus how your position would look like if you sell a condo after 5 years, then switch into a house for the remaining 5 years. And here are my assumptions. I use the same rates of appreciation of 5%, 20% down payment, 1.9% interest rate, 30-year amortization, 3% rent growth and inflation, and 1% vacancy rate for both properties. Let's go over scenario 1 where we buy a condo for $500,000 and hold it for 10 years. This will cost us $115,000 of initial capital for the down payment and closing costs. Our first month's rent is $2,000, and after expenses and our mortgage, there are no cash flows. Fast forward to year 10, when we look at total returns, there are practically no cash flows, but the total equity gained for the 10 years combined is $109,000, and the total appreciation is $314,000. We sell this property, take out selling costs and taxes, so we have a final total capital of $421,000. Then we compare this with scenario 2. We buy the same condo, but we sell it after 5 years. At the end of year 5, we have a total capital of $238,000 after taxes and fees, and we use the remainder to buy a house instead. With a house, there are better cash flows, so at the end of the first month, we have $900 in positive cash flows. At the end of year 10, we sell the house. After we take out fees and taxes, we have a final total capital of $540,000, which is better than keeping the condo for 10 years alone. So here are some extra insights from this example. The first one is cash flows. A house offers better rent yields compared to condos, and this keeps growing year after year, so over time, it will pay off those fixed costs of switching assets. Next, in scenario 2, you're essentially restructuring your assets in year 5. You can do this with refinancing too, but it works better when your property has stable market growth and gains from value add appreciation. This restructuring puts your capital to highest and best use, and you're also getting better returns on this capital from a house versus a condo, so you generate better long-term returns. And the last insight here is that value add appreciation wasn't considered, but again, there is definitely more opportunities in that freehold space. So if you factor that in, then you'll likely get even better returns in scenario 2. I hope this video was useful for you. If you want to restructure your investments, we can help you find the best real estate investments in Toronto. We also offer property management services for clients who buy investment properties with us. So if you like the sounds of a freehold investment, but you want less headaches, remember this is an option. You can contact us by heading to the link I'll put in the description below. Finally, if you find this video useful, please remember to give us a thumbs up and help us out by sharing it on your social media and tag us at Elevate Realty CA. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.